Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Kate Campbell, welcome to this episode of the Australian Finance Podcast.
It is wonderful to be back on.
We're in deep. We're talking about the Vanguard VAS ETF, Australian Shares Index Fund ETF. Sounds exciting.
Yes. Well, it's one of the most popular ETFs around, and it's...
Some might say the most popular.
The most popular. Well, we've got some stats later that might illuminate that a little bit more.
Yes. Popular amongst males and females. Thanks to our partners at Perla, we've got some data on who actually owns this ETF as well. So not just what it is, but who owns it. And we can talk about probably how they're using it.
Yeah. And I guess in this episode, it's just part of our... Every month we do a look into a share or an ETF that's popular with our community or requested. We get emails via our podcast at rask.com.au email address. So feel free to send a stock or an ETF our way there that we might be able to have a look in a future episode. So it's not a recommendation. It's just us having a look under the hood about what the ETF is today, how it works, how you might use it in a portfolio, and just even how to buy it and where to find some more resources on it.
Yeah, so we'll give you a intro to the VAS ETF today, and we'll talk about how it's used, how big it is, why it's so popular, and then you can vote also, typically in the Facebook group. You can head to the Rask Australia Facebook group. Last time we did some polling of the community. The community recommended their own companies and ETFs, so much so that they were almost as popular as the ones that we recommended that we take a look at. So if you do want to have your say and you want to give your view on VAS or any of the upcoming episodes that we do, please jump into the Facebook group and say g'day. So today we're going to do a bit of an intro into VAS, what it does. We're going to talk about fast facts. It's important to remember that we are recording this, as he checks his Apple Watch, on the 8th of July, 2022. So some of the things that we talk about today, we're trying, and hopefully the facts and figures are accurate, but they may change. And it's important to remember that because, if we talk about performance or if we talk about fees, Vanguard is continually lowering fees. And if we just talk about anything to do with the fund, it may change in time. So the best port of call is the PDS, which will be available on the Vanguard website.
Yep. Top holdings will change, all sorts of things like that. So always, if you're listening to this in the future in 2023, make sure to look at the Vanguard website and just get all the most up-to-date information here because you want to make sure you're fully informed before making any decisions when you're researching.
Yep, cool. I like it, Kate. So, Kate, maybe this one's one for you. Tell us about the VAS ETF. What does it do?
Yeah, so the VAS ETF is one of those core ETFs we talk about that form the center of your portfolio where you can have exposure to Australian shares, US shares. So in this case, VAS ETF invests in the top 300 companies listed on the Australian Stock Exchange. So you've got everything from BHP and Telstra in there. So you'll see lots of familiar names, especially in the top 100 in that list.
Yep.
And it aims to track the index of the S&P ASX 300 before taking into account fees, expenses, and tax. So it's a really low-cost ETF. We'll touch on the fees and how big the ETF is as well.
Yep.
But it's just a way for you as an investor to get exposure to some of the largest companies that are listed in Australia.
Yep. So it's important to highlight that you said ASX 300.
Yeah, that's probably a big point of difference when you are doing your comparison.
Yeah. So this ETF is the top 300, whereas what you see on the news is the ASX 200. So if Kosh is reading out the news, that would be the ASX 200 that he's quoting. And the primary difference is there are 100 or about 100 more companies in VAS versus other ETFs which track the 200. Now, in practice, those 100 don't make that much of a difference because those 100 are actually the smallest 100 within the fund. So that's important to highlight. There are ETFs that track the 200 if you are interested in that. The BetaShares Australia 200 tracks the 200 largest. The STW ETF from iShares, tracks the ASX 200, as does the IOZ ETF, a family favorite here at Rask.
That's your iShares ETF.
That's the iShares ETF. And then there are other ETFs which also target Australian shares in different ways. There are heaps of others. So it's just important to highlight the difference that VAS is 300, not 200. Tell us a little bit more about the ETF. Like, does it pay dividends? Does it allow for dividend or distribution reinvestment plans? Those types of things.
Yeah, so definitely paying distribution. So similar word, just what we use for an ETF.
Yep.
So quarterly.
Yep.
Generally, it's had a long history of paying quarterly distributions. You can use a dividend reinvestment plan. So instead of having the cash paid into your bank account, you can elect to get additional units in the ETF.
Cool.
It's been around since May 2009. So that's a pretty long track record for an ETF, considering most of them have popped up in the last sort of 5 years.
Yeah, this is one of the oldest ETFs as well as being the biggest. And that's important because then you can see a track record of the fund that you're looking at. What's important to understand, and a lot of people don't know this unless they've done this type of thing before, is that the Vanguard VAS ETF is actually a managed fund under the surface. Like, if you look down underneath, it's actually just like any other fund. And that fund started in 1997. So this is an ETF that is wrapped around a fund that's been going for even longer than that. That's why when you go to like the Vanguard website or you go to any ETF provider website, there's often two numbers. There's one that says the size of the fund, and then there's another one that says size of the strategy.
Yeah.
So what these big ETF and fund managers do is if they have one fund that's successful, what they often do, like let's say there's a fund that invests in US shares for some random company. What they'll do is they'll make that one fund available to Australian investors, to US investors, to Canadian investors, to European investors. And that's all part of one strategy, but there are different like ETFs to get into it, so to speak.
Yeah.
And so that's what the difference is there. If you've ever wondered why on the Vanguard website it says strategy FUM equals this, or ETF size equals this, and they're two different numbers, that's why.
Yeah, like just on the VAS Vanguard page right now, you've got those two numbers right there. You've got ETF, AUM, so assets under management, and then underneath it you've got total assets under management, which is a much bigger number.
Yeah, so I can see on my screen here, the ETF itself has $11 billion in it,
Which
invested
is
through it.
huge,
yeah. And then the total strategy has $28 billion.
Yeah.
So it's a massive, massive fund and strategy. And so those other investors, the ones that aren't in the ETF, might be like super funds. They might be direct investors to Vanguard who had invested in the fund before it was an ETF, and so on and so forth. So
and that's probably one thing to note when you are on Vanguard's website and looking for information on VAS or any of the other ETFs. It will often say available in other classes, and you can pick retail fund or wholesale fund. So if you're looking for information on the ETF, make sure you've picked ETF. But if you're Googling VAS ETF, it comes up straight away with the right page. So.
And that's important to know because some investors who have more money or who qualify for certain exemptions, like say if they have skills or income or assets of a certain size in Australia, they can access different types of the same fund. And typically what it means is if you have more money, the Vanguard in this case doesn't have to comply with a lot of the rigorous rules around like compliance or around proving, who you are and what risks you're willing to take, etc. They can just offer you something, and it often means that you get it cheaper too.
Yeah. And management fees for the VAS ETF, 0.1% per year. So that's pretty low in our books.
Yeah, it is. It's so the average of all ETFs, and this is according to the best ETF data, is around about 0.5.
Yeah. Is that including thematic ETFs?
That's including thematic ETFs as well as some of those funky ETFs that are like doing like inverse stuff, which can be like 1.5%. And it also includes active ETFs.
Which
so like
are often
Magellan's
1%
ETF.
or above.
Yeah, so they skew it. They're like really expensive compared to this ETF. But even amongst its direct peer group, this is still cheap.
Yep.
So, and it's coming down. I remember a few years ago it was 0.15 or 15 basis points. Now it's 0.1 or 10 basis points. And I remember a few years ago it was 15, and BetaShares had launched its A200 ETF, which is a direct attack on this ETF, for 7 basis points or 0.07. And at the end of the day, you won't notice a difference unless you've got millions of dollars.
Yeah.
And the other thing that we spoke about before we started recording, and Dave from Strong Money, is it? Yeah, he pointed out that Vanguard actually does something behind the scenes where it lends some of the stock out, and the fees on the ETF actually in practice are a lot lower than what it's quoted here. So it's actually even better again.
Yeah. Yep. And the ETF registry, just on the fast facts for VAS, is Computershare. So if you own units in VAS, you can find all the details by setting up your Computershare login, and you can elect to do things like dividend reinvestment plans, change your bank account details, change your contact details, and make sure you get all those tax documents coming
Put your
your way
tax
at
file
tax
number
time.
in.
Yes.
Because then you can do ATO pre-fill as well. So when you do your tax return, everything just gets pushed across, which is so much easier than having all the documents sent to you and then putting it in manually.
Yeah.
Yeah, cool. So tell us a little bit about Vanguard then, Kate. I feel like most of our listeners have heard of Vanguard, but...
Yeah, so if you listen to our episode on the VDHG ETF a few months back...
One of our most popular.
Yeah, that's also operated by Vanguard. And Vanguard are a global, huge ETF provider. And what they do is they construct all these ETFs and they put them together and they operate them. And then you can just buy units in them. So instead of you having to go and do all the complicated work yourself, Vanguard do the hard work of putting all these products together, and you can just buy units and they manage the operations.
Easy.
Yeah.
So Vanguard was started by Jack Bogle in the 1970s. It started as index funds, and then it moved into ETFs. I believe I'm not mistaken when I say this, that Vanguard wasn't the first ETF provider. People think that it is because it's one of the biggest, but it saw ETFs as a way to get people into its index funds. And now we have Vanguard here in Australia even offering its own brokerage platform. So it's gone from just index funds to ETFs, now to having its own brokerage, which you can auto invest and do like regular investment plans and stuff into.
Yeah, Vanguard's really trying to grow in Australia now, and I think the super's coming soon. It's been
rumoured.
It's been on the way for a while, but Vanguard is very good at having simple and low cost ETFs and managed funds and other products.
No BS education as well on their website, which is great. There are some other things to know about Vanguard, I think. One is that it's the amount of money that people have invested with Vanguard now over the years is in the trillions of dollars, right? Trillions. It's enormous, right, this thing. Vanguard also offer what they call active strategies. So this is, traditional Vanguard ETFs or index funds like this one here. Just follow the ASX 200. But they have different variations now that have what they call like value tilts or value strategies, which is like where instead of just tracking a standard index that measures the biggest companies, they also look for companies that have the best valuations now. And that's more active. That's more like them saying, we don't just do the standard ones, we can do the other ones too, just like everyone else. And the other thing to note about Vanguard is that it's mutually owned. So basically what that means is in the United States, the investors in the funds actually in effect, owners of the fund. And that's why Vanguard's fees continually fall down, because the people who are investing in the funds are the ones who basically own it. So then the benefit of lowering fees is benefiting all of those investors. And that's why I think Vanguard is unstoppable. That single fact is what makes Vanguard unstoppable.
Yeah, they've had a huge influence in the global ETF market and just the movement of low-cost investing and keeping things simple. So hats off to Vanguard.
If we think about just one final thing, if we think about the companies over the past 50 years that have transformed, I guess, our lives or added the most value to people's lives, people will probably think of like Apple or Google because it helps you search the internet to get information. In fact, it's probably Vanguard that has created the most value, at least for the Western civilization, in the past 50 years. Because not only has Vanguard saved you thousands and thousands and thousands of dollars each and every year, but it's also saved your super funds because it's forced them to lower their prices and allow them to invest in low-cost strategies. And yes, it's taken money away from the finance industry, where the fees are normally big and fat, but it's saved so much money.
Yeah.
So it's a hidden feature of Vanguard that people haven't realized. So worth mentioning. Okay, Kate, who owns the VAS ETF? So we come back to just this single fund or ETF. Who invests in them?
Yeah, so thanks to our broker partner on the podcast, Perla, who allow you to invest in shares and ETFs, auto invest. They've got Perla Micro,
Yep.
which VAS is something you can actually purchase on Perla Micro. So they've provided us with some cool data, and VAS is actually their number one ETF that people are investing in since they launched.
Oh, cool.
So very popular with investors on their platform. It's nearly an even split of male and female.
Okay.
So that's pretty cool.
That's cool.
And average age is 33, though Perla does have younger investors on their platform. So there's not as many 60 plus people.
Yep. That's still cool though. 33 years old is the average investor. That's really good. Mate, 20 years ago, there wouldn't have been a platform in the world that had a 33-year-old average age for an investor.
Which shows lots more young people are getting involved in investing, which is
fantastic.
Pretty cool.
And they're doing it sensibly by investing in VAS.
Yeah, and what Perla does, which is really cool, is it often tells users through their Instagram and things like that the percentage of buys versus sells on that platform. So that's looking at, okay, in the month of June, how many people bought shares and ETFs on our platform and how many people sold shares and ETFs on our platform. And generally, it's significantly in favor of buying because they really advocate long-term investing like we do.
Yep.
And so for the VAS ETF in June this year, it was 95% of the transactions in VAS were buys. So most people are buying for the long term. They're staying calm during these volatile times and they're not selling.
Yep. I like it. So this is really amazing data because to think that people in June 2022, after everyone has just talked about inflation and interest rates have gone up, and now we're talking about a recession, people were buying more. That's really, really a credit to everyone. It's working. It's
VAS
working.
is often part of that long-term strategy.
Yeah.
It's not something that you'd be buying and you probably shouldn't be buying and selling it on a daily basis. It's not something you'd be trading.
No, you don't trade these types of things.
This is something you lock under the bed.
Yeah.
That was a weird analogy. I
So
just lock in the bottom drawer.
Yeah, we could lock it under the bed, which sounds a bit spicy, but that's okay. We'll go with that.
Yeah, I mixed analogies there, Owen. But yeah, and because you can buy it in Perla Micro, so that's if you've only got small amounts of money and maybe you can't buy whole units of VAS, you can invest in Perla Micro, and they've 32% of micro portfolios hold VAS. So that's another way to start investing as well.
I'm surprised it's not higher. Like I guess with micro, it's still launching from Perla and it's typically smaller balances, so you don't diversify as easily, although that's the point of it. I'm surprised it's not higher. I guess that means that maybe people are investing in other things through Perla Micro. Maybe they're using a different ETF, but I know there's only selected ETFs. So surprised about that. For context, 57% of Perla Micro users invest in VDHG, which makes sense because VDHG is like a one-stop shop for beginner investors, basically. Yeah. So that would make sense. But I wouldn't be surprised for Perla Micro users to see VAS increase. Okay, this is your favorite part of the show, Kate. What does the VAS ETF actually invest in? So if you buy VAS inside your brokerage account, what are you getting?
Yeah, I think this is one of the most important bits to actually look at what you're invested in, because it's very easy to buy and sell units in this ETF and actually have no idea what's underneath. You can say conceptually, oh, it's the top 300 largest companies in Australia, but what actually are they?
What do they look like?
That is one of the great things about ETFs is that transparency. So you can go to the Vanguard website right now, you can pause the podcast, search VAS ETF, and just scroll down to the section that's called Holdings Details, and it will tell you all 300 holdings. It'll break it down by size. So you can see that BHP is the largest holding in the VAS ETF. Over 10% of the VAS ETF is invested in BHP.
Now, you were outraged by this.
Well, I just thought it was interesting. So if you had $100, Owen, invested in VAS, that would mean around $10 of that $100 would be allocated to BHP. So as an investor, that's quite a lot in one company when you think you're getting 300, so it's good to conceptualize that a little bit.
Are you saying that that's a problem?
I don't know. It's just when you think you're getting 300
Listen, mate, what's
companies.
your problem with BHP?
I don't.
Come on, tell me more.
No, I just think it's really interesting to know that the top 10 holdings of VAS, and this is very similar with a lot of ETFs, the top 10 holdings make up nearly half of the ETF itself. So things like BHP, CBA, CSL, NAB, Westpac, ANZ, all your big banks, Wes Farmers, Telstra and Transurban.
Yeah.
So that top 10 make up nearly half of the ETF. So you think, like originally you think you're getting 300 companies, which you are, but the top 10 holdings make up a huge proportion of that ETF. So it's quite interesting when you start to drill down with the numbers, what you are actually getting exposure to. So that means some investors that already have, like some of the older listeners might already have large positions in some of these blue chip, we'll call them companies. That means when they invest in VAS, they're kind of adding to that exposure.
Yeah. Just a side note for Vanguard. Can you please make your weighted exposure chart a pie chart? Like this is where they break up how much is invested in each sector. Like no one does columns. Seriously. Anyway, so for this, it actually, if to your point about 10% being in BHP, there's about 28% in the financial sector, right? So it's not only, this is a problem that we've known about for a very long time with the whole Australian share market. It's both top heavy and it's narrow. So what that means is
you've got the four biggest banks in the top 10.
Yeah, so that's why inside the VAS ETF, 28% of your money is invested in financials. So that would be the banks, but it'll also be things that are like financial related. So like Magellan, which is a fund manager, would be in there. And all those financially type companies, Macquarie would be in there. They're in there. But then the second highest is 25% in materials. So materials and resources. So I think BHP, Rio Tinto, blah, 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 blah. So basically you're getting, what's that? Like close to 53%, or 53% of your portfolio is banks and resources. Right? So that's another thing to consider. Whereas if you looked at the United States, it would be a much more even spread. You'd have more information technology, you'd have more consumer staples, discretionary and those types of things in there. So it'd be much more balanced. That's why, Kate, some investors don't like the VAS ETF or they don't like the A200 ETF or IOZ or STW. And they go for another ETF called the MVW ETF from VanEck. Now that only has about 100 companies, but it equal weights them. So, in practice, it's funny because that's why people use it. But in practice, the MVW ETF still ends up with about the same weighting to financials. So it's a funny old thing. But it's a valid point that you make. You're getting a lot of BHP and you're getting a lot of like Commonwealth Bank. So I just looked at the market cap. So this is the size of the company. It's like the value of all shares in the company. BHP is worth about 200 billion. The next biggest is CBA at about 160 billion. That's why they're 10% and 8% respectively.
Yeah, and I think that's the important thing to know about ETFs. It's not equally spread across those top 300 companies. It is weighted by the market cap. So this will change, like in a year's time, maybe CBA is the largest one and not BHP, who knows? But it is sort of like impacted. So I do think it's good to have a look at the holdings.
Yep, cool. So let's talk about the top 3 holdings, Kate. Do you know what they do?
Yep. So BHP is the biggest one, as we just mentioned.
Yep.
And they dig things.
They dig things out of the ground.
Yes.
Yeah. So BHP is a diversified miner. But importantly, in the past 6 months, it actually sold off its oil and gas business to Woodside. So it split that off. And in doing so, BHP gave its shareholders some Woodside shares when it split it off. It also paid its shareholders a big dividend. And so BHP is traditionally focused on iron ore, copper, coal, those types of things. So heavy mining, which for most people, they don't like because they want to screen out that stuff. I mean, that's an ethical debate many people would be willing to have. But there are ethical ETFs that kind of exclude these types of companies if you're interested in that. But for the most part, BHP has paid dividends. It's been around for, I think, over 100 years now. So it's been around a very, very long time.
I'd say it's a staple in a lot of the Aussie retiree portfolios because it is a big dividend player.
Yeah. Another thing that BHP did is it reunified its holdings. So it used to be listed on stock exchanges all across the world. Now it's ASX. So in the past, you would be able to trade BHP in London and you'd see like the London share price and then you'd see how it reacted overnight and then predict what might happen in Australia and so on and so forth. But they did a reunification. So now that's why you see it's $200 billion in Australia. The second biggest company is Commonwealth Bank, which
most people would be. No, I think most people would be familiar with Commonwealth Bank. You've probably seen one on your street corner.
Yep.
They've been closing lots of branches though because it's cheaper to do everything online. But I think CBA is an interesting one because it does focus a lot on its technology.
Yep.
I would have to say, after having a look at like the 4 biggest banks' apps and things. CBA is doing a pretty good job with CommSec Pocket. It's just everyday banking app. It has a lot of features in there. So they do everything from home loans to banking. They're integrating fintech. I mean, I was at a fintech conference last year and they're getting into venture capital and all sorts of things. So CBA seem like they're trying to be at the forefront of innovation with banking.
Yeah, they have been for about the last 10 or 20 years, to be honest. Like many of their big banks are built on old, crusty infrastructures that were like 30 years old, technology, and trying to update that while also making sure people still have access to their money is very complicated. But CBA has invested in its technology over many, many years. And all the banks are trying to play catch up, but CBA is still a long way ahead. So that's helped it. In addition, like it's a massive lender, so it gets good credit ratings. It's one of the big
employs a
four.
huge amount of Australians, has a lot of engineers and compliance people now.
Yep. So, like one of the things that maybe people don't know is that the big four banks being NAB, CommBank, Westpac, and who's the other one? ANZ, and actually Macquarie's included in this.
Yep.
They've always had this little advantage that not many people know about. It's that they're actually, when it comes to when they loan out money, they don't have to comply with the same risk rules that the other banks have to. So because they're so big, they actually can do internally, it's a bit complicated, but basically they can lend and they can be basically the judge, jury and executioner of their own lending, which means that they can assess their own risk in a different way, which has always been an advantage for the big four. And that's why they just keep getting bigger.
Yeah. Yeah. And one of the other biggest holdings is CSL. So something a little bit different to digging dirt and banking.
Yep.
Biotechnology business. So doing all sorts of things in research and vaccines. It's been quite in the news a lot over the last couple of years with COVID. And when I was having a look, CSL actually stands for Commonwealth Serum Laboratories and was established by the Australian government in 1916 during the war to ensure we had our own supplies to medications because we were worried about supply lines being cut off during the war.
Yep. And
fun fact for you.
Yeah, CSL, Commonwealth Serum Laboratories, it IPO'd on the ASX in the 90s, I believe, early 90s, like CommBank, I believe. And investors in CSL and CBA have made a lot of money.
If they got in at the very start, they were good ones.
I would say you've made more money from CSL, I think. But what's interesting, so what does CSL do? They do, if you get bitten by a snake and you need an antivenom, chances are it comes from CSL. They also do blood plasma collections and things like that throughout the United States. They're massive. And the other thing is they do the influenza as well. In Australia, people like myself were turning to CSL to see if they could help with vaccinations for COVID. And that's not exactly what they did, but they could assist through their laboratories and all that sort of stuff to distribute and what have you. So those are the three biggest companies, Kate. They're all quite diverse, even though we said before that the whole ETF is quite concentrated. They're three really interesting companies. Okay. I'm just going to throw under the bus here. How could you use VAS in a portfolio?
Yeah. So the way I'd see VAS is one of those core holdings so that maybe 80% of my portfolio is in core, staple, long-term holdings that I'm not going to be changing up all the time. So these are things that I don't plan on pressing sell on for a long time. So because I'm invested in, this would be invested in top 300 Australian companies, and maybe you also want to have some US exposure and some bonds, some cash around that in the core of your portfolio, and then you do the fun stuff on the side. So yeah, this is one of those
fun stuff on the side. I like that.
You got to give yourself a little
you do.
wiggle room.
You have to have an outlet.
Yeah, but maybe if you wanted a thematic ETF or crowdfunding or something, you'd put that on the edge, but VAS would be a core ETF.
Yep.
I don't hold this one, but there's some other alternatives to VAS that are slightly different but very similar because they're top 200, not top 300.
Yep.
You've got STW ETF, you've got the A200 ETF, you've got the IOZ ETF. And what was the other one you said?
I said MVW, which is ASX
slightly
100 equal weight, basically.
Another sort of ASX top 100.
So this is every week across Australia, this is the number one ETF that's purchased inside brokerage accounts. VAS being the one that I'm talking about. And it's that tells me it's part of people's core portfolio. It keeps lowering its fees, pays franking credits through the ETF. You get reliable income because it's spread out over so many companies. It is exposed to financials, so those are some risks, and resources, which is another risk. But most people would use this in their core. The other one that you could use in your core, and you wouldn't have this and that necessarily, unless you were trying to tilt it slightly, is the VHY ETF, which is the high yield version of the VAS ETF, basically. And so what VHY does is VHY targets companies with dividends and excludes those that don't pay dividends. So that's the primary focus. Like retirees might opt for VHY. We've done a full video over on the Australian Investors podcast about VHY and about STW, A200, IOZ, MVW, and VAS. Like we did all of them in one show. I did that with Drew. And if you're interested in the comparison of the ETFs, that's where you can go to learn more. The number one debate amongst Rask members and our ETF members is A200 or VAS. I chose A200 because at the time it was so much cheaper than VAS, but nowadays it's very, very much neck and neck. And to be honest, I would probably go VAS if I was starting out today, simply because the fees keep getting lower. And so that's something to keep in mind. Is it just keeps getting lower and lower, or maybe even VHY if I was talking to someone that had an income focus. So, I mean, one of my fears, Kate, is that you have all of your funds with Vanguard. And in the past, that's been fine. But there's always, that thing in the back of my mind, which is like, you should probably diversify across ETF providers. So that's something that I think about. Okay, long-term performance, Kate, what can we expect?
Yeah, so VAS ETF, a lot of the performance is actually made up from distributions. As we've mentioned, those big companies like CBA and BHP have been known historically to pay pretty big dividends, Australia-wise. So when you have a look, returns are pretty decent. So since inception, which...
It's a long, long time, but...
A long, long time ago, around just over 9%.
Yep.
But 10 years, that might be a bit more relevant, 10.24% per year on average.
Yep.
So it's fallen a little bit recently with the overall market, but these figures are end of May. They haven't updated them.
Yeah, end of May 2022. So 10.24%. And basically, like to Kate's point, dividends will make up a portion of this. What you won't see in the financials and in the returns is actually the benefit of franking credits. So if you get franking credits, I actually showed in a live session this week that I did that if you looked at these ETFs over 5 years, the total return, which includes dividends, so total return means share price going up plus dividends. The total return, as we can see on our charts on the Vanguard website, about 8 or 9%. If you exclude dividends, it drops to about like 3 or 4%, right? That's over 5 years. Now, if you include franking credits, it's like an extra 1 or 2% potentially. So dividends, franking credits make a huge difference. And if you're wondering how has the Australian stock market performed over 10 years, like the whole stock market, you can basically go to the Vanguard VAS website page and you can just take those returns as that's representative of the whole market. And just a word of warning here, we've quoted the annualized performance of 10%. This was to March 31, 2022. Just remember that past performance is not indicative of future performance. And what I mean by that is it's not just a disclaimer, is that over the past 10 years, interest rates have fallen and shares have performed really well. So there's no guarantee that you'll get 10% going forward. I think that's really important to remember. It might be 5%, it might be 7%, and then it averages out over time. Yeah. Good to remember. Kate?
All right, how do you buy? So if you want to buy units in VAS or any other ETF, really, you're going to need a brokerage account. Many of our listeners would be familiar with the concept of brokerage accounts. It's really that middleman that allows you to buy and sell ETFs with someone else in Australia or somewhere in the world without having to know who they are or have to find someone to buy your shares or ETFs or vice versa. So you could use something like Perla, which is our partner on the podcast. You could use ComSec, you could use Stake. There's heaps of different platforms.
You'd use Vanguard itself?
Yeah, the Vanguard Personal Investor platform. So there's a lot of different ways you can invest. I just recommend picking a couple, having an experiment with them, seeing what works for you because they all offer slightly different features.
Yep. And I would also mention that the VAS ETF is probably best purchased in $1,000 to $2,000 increments, probably closer to $2,000 depending on your your brokerage that you're paying. So there are other options. You can do the micro investing options. There's ComSec Pocket, there's Raise, there's Perla Micro. There are a bunch of them that do it now. And so you can get exposure that way with smaller amounts. The share price, just for reference, when we're recording is around about $82, $83. So why that's important is that, for $500, what you might get, we get less than 10 units. So you might find that it's easier to use micro if you've got small amounts of money. And that's worthwhile chucking in there. Kate, if people want to learn more about this ETF, where do they go?
Yep. First protocol, if you want to learn about an ETF, is head to the ETF provider's website. So in this case, Vanguard, and just search VAS.
Yep.
If you search by Google, it probably comes up straight away. Just make sure you're on the ETF page.
Yep.
We've also got data on our Best ETFs website. That's bestetfs.com.au. You can look at the VAS report. We've done it on the Australian Investors podcast, so I'll link that in as well if you want to find a bit more information.
Yep, cool. And so we, like I said before, for our Rask ETF service, which is our membership service, although we don't recommend VAS, we could in the future. And if you're a member listening to this, you can still jump on there and ask me questions. There's a discussion forum in there now. So you can jump on there and ask me questions about the ETF if you like, and why I chose that. Why I chose A200 over VAS, if you want to dive deeper into that. If you want to join Rask ETFs too, I think this is a natural call out. If you do want to learn more about ETFs and dive a little deeper into all different types of ETFs, head to the Rask website and use the coupon code AFP, not Australian Federal Police, that's Australian Finance Podcast, and you can get membership for $49.
Awesome.
Cool. Kate, this is the VAS ETF, the most popular ETF in Australia by a total amount invested. I think it's a bit of fun. I think we're going to have a lot of questions about this in the community. If you do own VAS, please let us know why you like it and how you use it. I think that would be great.
Yeah, absolutely. Well, thanks everyone for listening.
And thanks for joining me.